Are there any warning signs to look out for when a market's going to crash?
Oh, when a market's going to crash. Many months of distribution at the top of a market. So what I mean by distribution was defined by Richard Wyckoff. He says that there's basically three stages. At the bottom, there's accumulation by insiders, and that takes period over months and months and months. These are very sophisticated people that have got the ability to buy a share, but not push the price up. So they will surreptitiously take 100 here, 200 here, 200 here, and they will accumulate, and they're good at it without pushing the price up. And then all of a sudden you have markup, where all of a sudden all the people that are in the know have got filled, and the rumor gets out that this share is going to do really well, and then sort of more naive people keep sort of buying it at market and driving it up the page. And then when it gets to a point where it's shot right past value, then you get distribution, and the same people who surreptitiously bought it will be surreptitiously offloading it. Now, at the bottom of a market, if the price spikes up, you should see the volume rising. So every time you see a spike up, the volume should rise on that spike. That's accumulation. In the distribution stage, as the price falls, the volume should rise. And as the price spikes up, the volume should fall. So and sometimes it's not easy to see, but by looking at price and volume, you can actually tell whether you're being an accumulation phase or a distribution phase. That's in an ideal world. Sometimes it's not easy to actually work that out. So if in a bullish market, as price rises, the volume rises. As price falls, the volume falls. In a bearish market, as the price falls, the volume rises, and as the price rallies, the volume falls. So by looking at price and volume, you can tell that. Victor Vest looks at the breadth of the market in great detail. And invariably, when a market rises, it will rise strongly across the board, and then towards the tail end of the trend, you'll find that it starts to rise on a falling breadth. In other words, it's been propped up by one or two companies. A classic example of this was the NASDAQ, which rose on one company only. It's called Apple. Okay, so on the New York stock market at the moment, we follow 7,500 shares on the New York stock market, on the NASDAQ, and the other exchanges. And at the minute, the New York stock market, the American stock market, should I say, has broken up to new highs, but our buy-sell ratio, in fact, is falling. And that's saying that the breadth of the American market is narrowing, and that's an advance warning that we're going to get a pullback. I'm not saying a crash. I'm not saying a crash at all. A pullback, and that pullback could easily be that sell in May and go away thing that we see. I think that the Trump trade, I think we need a pullback in the market, but I think the Trump trade has got still a little while to run, especially if he does what he says he's going to do.